All right, hey everyone, it's John. I'm here with Jason Freiert, the CEO of Angel Publishing. We're just going to talk about kind of like a little bit of the history of Angel Publishing and kind of the state of the business and where things are at. So thanks for being here, Jason. Or actually, I'm here at Jason's studio. Obviously, this is a little bit different than my little crappy setup at home. Uh, this is awesome. Thanks for having me up here.
Yeah, thanks for coming. We moved into this building 2 years ago, and we have this kind of set up as a recording studio. We started doing podcasts here, and most of our audio and video stuff is in here. We sort of, when we bought the building, we wanted to make sure we had a space to kind of do this that was away from, just because video and media like that is the big thing to be doing these days. So we wanted to make sure we had a space for it. So glad
Yeah,
you could make the trip up. I like face to face.
I like it too. It's a lot better than Zoom.
Yeah.
Much cooler. So let's get into it. Like, just as an overview for anyone who's not familiar with Angel Publishing, you guys have been around for quite a while.
Yeah, I came on in 2005, right out of college,
Nice.
and it had been running for a couple of years. So the founders are our principal founder in Baltimore is Brian Hicks, and Bill Lowe was another founder. They both worked at Agora. Brian was a copywriter. Bill was kind of a marketer, like product manager person, and so they kind of brought Brian in to do the copy, and it was just them and a couple of people for a while. In 2003, started
Hmm.
the Wealth Daily newsletter. So I was hired as a web developer to sort of help manage all the tech side of things, and that was in 2005. So we had 5 employees, and since then it's just been kind of a slow build, and we've tried to grow just a little bit every year and just kind of get bigger and bigger, and sort of now we're here. We're still around.
I still think of you like I just did a conversation with my friend Dan, who's a publisher over at Risk Hedge, and
Yeah,
he's
I think I watched that one.
yeah, so he's a very I think of him as a very traditional newsletter publisher, and I think of you guys kind of that way too. And it's not like, and I don't mean old school, I mean classical. Like there is a kind of a core thing about a newsletter publisher that, in my mind, has to do with like the audience that you select. I think like, and you correct me if I'm wrong, but I feel like you guys are one of the few groups that still and have always done stock picking, right?
Yeah, and that definitely comes from Brian and Bill coming from the Agora days. They basically trained under Bill Bonner and Mark Ford. So everything I learned from them, which is sort of passed down from the Bonner legacy of Agora, and it was all about the story, right?
Mm-hmm.
It's all about connecting with the audience, telling a story, and it just over time that's where our kind of focus went to, is like telling stories about stocks individually, but like sectors, and just focusing on that. And it takes a lot of time to tell a story. So we haven't really delved into the whole trading side of things. We just really like spotting trends, picking, sectors and stocks, and kind of telling stories about them. So it's worked out, and it ebb and flows, the different sectors. You kind of got to switch up.
Mm-hmm.
For when I started, we sort of built this company on the idea of peak oil.
Mm-hmm.
So oil was, I think, $35-40 a barrel, and they were saying it's going to go over $100, and they're like, "What? No!" Like, yeah, we're running out of cheap oil. Blah blah blah, and it was crazy. Within that first couple of years, it ran up, and almost, I would say, 75% of our campaigns were about oil, and we started alternative energy because that started coming up too, because people were trying to transition away from the
Mm-hmm.
expensive oil. So, and it went up to $150 a barrel at one point. I was like, oh my God, like we were calling this. We were like, it was like, I was like, these guys actually know what they're talking about. So, and that, really built a huge following on our list as far as energy. But, then it collapsed down there, and we kind of had to transition. So, that first 2007, 2008, we learned a lot then about like weathering storms and going through, because it's kind of not easy, but a lot of people can do this when it's like a bull market,
Right.
right?
Yeah. But I think there's like just that little vignette of history. like hits a lot of things in my head about publishing, right? Like I think about like the fact that you were on peak oil, right? We always have, like, in the industry as a whole, there tends to be a handful of sectors or themes at any given time that pretty much all the acquisition happens on.
Yeah.
And like peak oil was one. But then like there's also this piece that like I think Porter talked quite a bit about when, where you're talking to the investor, right? And he envisioned, when he launched Stansberry, he envisioned it as a subscription business in place of traditional investment research, right? And so if that's the case, then your stories are gonna be following, and if you're talking to actual investors, not people who are more like biz op,
Yeah.
then you're gonna be following kind of the storylines of the main market, but trying to show alternative kind of like stories. And I think peak oil was a huge thing back
Well,
then, right?
and it was huge. And the one thing that's interesting, and I learned this pretty early on, is, the whole idea of the barstool test of like, can you explain this to your friend at a bar and make it simple? It was kind of the copy angle, but it was also that, and we actually confirmed this through like research with our file, is that a lot of our subscribers actually don't even invest. Like, they follow the market like a little bit, but they're not the ones that are buying every single recommendation, putting 100. They're not like the trading side of things. They really want to just know what's going on in the world. So I think during peak oil, one of the things that really hit, like, I think where that really that critical mass is, everybody could see it. Everybody was going to the pump and saying, $5 a gallon gas. Okay. And then our readers were like, I know what's going on here,
Right.
because I read Energy and Capital. I read these guys. They've been telling me about this for 18 months, about how the cost of production is going up. We're running out of this, traditional cheap oil. And so that the idea that they have like knowledge that there are other people that they meet at dinner parties like don't know, like that was like, that was the sell.
Yeah.
And, obviously, you do what you kind of be like, hey, you can invest in this stock and make, 500% or whatever. But at the core of it, they really just want to like know more than their friends.
Yeah, I mean that's why, like, that's half the reason I study any of the things that I study. But that storytelling piece, I mean, there's a great book called Narrative Economics that really talks about how, like, it's really like the markets are a battle between narratives, and I think that is one of my kind of arguments over the last, I don't know, several years with this bull market we had, because we had not just the longest bull market, but you had like the crypto boom, which was spectacular. You had the cannabis before that. You had all this stuff, right? We had like the explosion of options trading at the beginning of the cycle, I'd say back after '08. And so I feel like a lot of people, especially leaning more towards the trading side, were able to get lazier about storytelling and still make a lot of money.
Yeah.
And it's like kind of like the water goes out now. And if you can't tell a story, all of a sudden it's way hard. I mean, it's already hard for everybody. But like, I guess my question then is, have you found that because you have a storytelling approach to the entire business, do you find it harder, do you think, to find copywriters who can really perform in that these days, or not?
Well, yeah, these days for sure. I mean, for the longest, I mean, and it was probably 4 or 5 years ago, because you say the, classical newsletter publisher, like, our gurus are, they're smart. They know their shit. But they aren't like the 25-year hedge fund manager that worked on Wall Street for 30 years. We try to position ourselves, and that's our story that we tell. We're the opposite of this. We're in Baltimore, we're not in New York. And for a while, the copywriters would be like, well, how am I supposed to sell this guy who just, knows the oil markets like the back of his hand? Like, did he travel to Saudi Arabia? Did he do XYZ? And like, what's his track record? Which usually a track record would be pretty good. So they would kind of focus on that. And they kind of struggled to think outside the box in terms of the stories that are being told. And it's not, I mean, even like, Jim Rickards, right? Mm-hmm. He has a great story to tell, and like the whole like CIA like angle, but it's really just like that's the thing, right? You
Right.
think Jim Rickards, CIA guy. So it's like all of our guys have that one thing, and you kind of just have to look at that story
Right.
and kind of pull on it. And then, I found that once you do that and they open up and they really get to know that editor, like they just fall in love with that editor. And
Mm-hmm.
like they love that, they play in a band on the weekends. They, love that they are like an avid hunter and they kind of build that. And then that's really when markets like this, that's when you survive on your renewals and retention. Because for the longest time, I mean, especially on front ends, like your refund rate has very little to do with the track record.
Yeah.
It's all about that editor and this, the story that you're, telling with them and the connection that they're having with the readers. They will stick with that editor through thick and thin if they just like them.
Right. So if they have the relationship and the connection and building that into copies, like, putting the personal stories into the editorial, which I feel like you guys do quite well when I read your stuff. It's
Yeah, and that comes from Brian because for a while, like Brian was like our sole copywriter,
mhm.
and we always lean towards having an internal copy team. Now we've had some great freelancers that we've worked with, and what ends up happening is then they usually gravitate towards one of our editors and they kind of establish a relationship and they know the guy
Mhm.
and they talk and stuff like that. That's usually the most successful that we've had. Very rarely have we been like, hey, this random copywriter, hey, can you write a promo for this editor? And he's like, yeah, and he writes it up, and then it's like a blockbuster hit. It's
Right.
usually like the second or third time that they've sort of gotten to know the editor, and they can kind of see, they're interested in this kind of sector. Like, oh, did you know that he went and did X, Y, Z, and visit this lithium mine in Argentina or whatever,
Mm.
and then they kind of develop the story off of that. But the internal teams, they already kind of know that. And then, if you are in the office or communicating, you can get those anecdotal pieces about like, what they eat for lunch. They eat the same thing for lunch every day. And then they are always, locked in their office pouring over, whatever you want to develop about that editor. And it actually is authentic.
Right.
And people can kind of tell that like, hey, like, not sure why it matters that he eats the same lunch every day, but they remember it and they're like,
I
okay,
like
this is
that
a
I know
real
that.
person. Yeah, yeah, I like that I know that. And like, I eat the same lunch every day too. So that's sort of where we've had success with our editors with internal copy teams is just getting to know the editor and just being honest about their flaws, but they know it's a real person, and
Mhm.
then they're like, hey, yeah, I want to follow this guy. Like, I like him.
Yeah. Nice. And so, turning a little bit to like kind of let's go through the COVID boom and bust. Because you said something. You guys got this office right before COVID.
Yeah, we were kind of bursting at the seams. We had 7,000 square foot in downtown Baltimore, and we wanted to do kind of model off of like Agora has these like mansions in Mount Vernon, and we wanted to have like an actual real estate investment to build on and kind of look for a home for the next decade or so. So we found this spot. It's a great building. It took us, I think, about a year to renovate like the areas that we wanted just to make it like how we kind of wanted, at least in part. And then yeah, we got the keys like January 2020. We're like, okay, everybody come over, and then we're in here for 2 months. It's March, and they're like, oh, what's going on with this COVID thing? And then they send everybody home, and so yeah, I think a good 3 months where there was maybe nobody in, and it was a scary time during that first like March, April. It was like we're like,
Hmm.
everybody was scared, like what is going on, like market's just tanking. But then, as anybody who's been around the past couple of years know, then it started really taking off because everybody's at home like, hey, I'm gonna pick up stock trading here and do this and that. And very quickly
Hmm.
things were working really well. And so we 6 months later, we really had to scale up. I think, our customer service team probably like tripled during that time. And even then, it was hard to keep up with that, all the just orders and any just generic customer service stuff. So that led us to have some chargeback issues with not getting back to people in time, and it was just this whole whirlwind of growth. And it was good stressful at the time, but I think you've seen it, like everybody kind of thought like, okay, this is like the new normal, right? We're just gonna grow at like 50% per year, because basically since I started, I think our growth has been like roughly 15 to 17% per year
Nice.
since 2005, and we were real small then, but we in from 2019 to 2020 we grew 50%, and then 2021 we basically were at the same, and then this year we're probably have dropped off maybe about 30% from like the peak there. So like if you do the overall trend line, we're still like there, but it's like kind of evening out there.
I mean,
So
I think that's what like the entire industry just experienced, in a sense of like there was this catalyst of COVID that the two industries that like just exploded were at home bread baking and FinPub or stock trading, and everybody hired because you had to, like, just to keep up
yeah,
with it. Everybody hired, and a lot of the layoffs this year happened because you had a hiring boom for this peak period that was a temporary event, but still like that the fact that you were higher than you were pre-COVID.
yeah.
Right. Like, so there's a retention of that. So like the trend line is still up.
Yeah, and that's what I have to remind myself and just our company. It's like we sort of went through this, like just zoom out, and you can see there, because I think it's real easy to get into the people just accept things as normal like pretty quickly. Is like there's no way, like that kind of growing at 50% a year like scares me more than dropping 30% for a year, because it's like that's always been my biggest fear with us is growing too fast, because I've seen it with other publishers and really just other businesses in general, of just getting, and it's good to be ambitious. And I think, one of the criticisms we could probably have is that, yeah, we haven't been ambitious or aggressive enough. I remember when I was talking to Angel Suarez, he was like, yeah, I like Angel. You're just doing your thing. It seems like you could do more if you wanted to. And I'm like, yeah, we could, but it's very much a kind of a traditional conservative attitude about like just steady growth. And I really credit the ownership for that, because I think a lot of times people get a little bit greedy and they want to, they put so much back into the business to grow it. And whereas, when you're, a principal of a company, like what's left over kind of comes in there, and you have to decide like, hey, are we going to buy this building to build the business? Are we going to put X, Y, Z back into marketing to grow the file? Or like, am I going to, just take it for myself? And I think mostly people just take it for themselves.
Yeah, I think that's probably, especially on the smaller publishing company, that's like the biggest problem is that, I've said this ad nauseum, I think at this point, but like you see it, like somebody might get up to, there's two owners, maybe more in some cases, but at least two owners in most of these small pubs, and both people end up in a position where their entire income comes from it, and so they get to a media hurdle where they can't get over because they would have to dramatically cut their income
Yep.
in order to buy more media to acquire. And so either they go find capital somewhere else or find another revenue stream, or they have to suck it up for 2 years and like go back to college level like income.
Yeah.
And that's a hard ask for somebody who's got a family or is later in their career. And
Yeah, it is. And it is interesting to kind of see that transition, because, I think fortunate that, our ownership is, committed to building a long, sustainable business. And I think that still comes from the Agora days, of just witnessing it. They were there real early and just saw the massive growth that they have there. And we were kind of built on like the earlier like Agora laissez-faire like philosophy, and it's always been like rule number one, like don't lose that, right?
Mm-hmm.
Like don't go corporate, don't get too big for your britches, and don't, sort of everybody's a team player, like no one's bigger than the entire company. And that's like kind of ownership in my like number one goal is to make sure everybody sees that, and the people that stay with us for a while sort of share that same goal of like building a sustainable. Because I'm 40 now, but when I started, I was super young and was like I want to be employed and for like a while. Like I don't want to just like blow things out for 3 or 4 years and try to make a lot of money and then like kind of burn things to the ground. Like I like building organizations that are around for a long time and kind of building relationships and continuing to incrementally improve.
Yeah. No, I mean that growth piece, like that's, you know, I think a lot of people have changed, and I've changed my view on it too, because there was a period of time where it seemed like you could just like, if you really hit it hard and got aggressive, you could have these explosions in growth. But pretty much all of those companies that exploded like that have imploded to some
Yeah.
degree. And
Well, you got the FTC like kind of piece now too. And we went, we watch that stuff and we try to, have everything above board. But, when you start talking to lawyers and all this, it's like, if someone wants to get you, like they could get you
mhm,
on almost like anything. So we basically, had the philosophy of is like we're gonna operate in as good a faith as we possibly can, make sure our subscribers are like, we're open and honest with our subscribers about, and then just do right by the subscribers. And but even with that, it's like it takes one or two like sort of crazy like subscribers that they know somebody here and they won't give up, and they're determined to sort of bring you down.
mhm.
So that's something that as you grow, sort of your risk of that type of scenario sort of increases because you just have that many more
Yeah.
subscribers.
Every,
So
every,
I'm not saying I wouldn't want to build $1 billion publishing company like Agora has built. Like that's great. There's a whole lot of problems that come with that, and I think at the end of the day, staying a little bit smaller, I think everybody kind of enjoys it. It's not like you can't make a lot of money doing
I
that.
think that's it. Like everyone I know who's pushed up into the $200-300 million range, or even $100 million range, has told me privately that they regret it. Like every single one of them, except for maybe Porter. He never said that, but like everybody else is like, once you get past a certain point, then you're not. Your time isn't spent on the fun parts of the business,
Right.
right? It's not the storytelling, it's not the copy, it's not the editorial in the community. It's the employee issues, because now you have so many. It's the like I know one guy in this who hit about 200 million in a different sector, really, but he was like, once I hit like 180 to 200 million, it was like I feel like all my time was spent on lawsuits.
Yeah.
Like between employee, like everything, it just takes up so much time, and it just sucked the life out of. And he left that business. He ended up exiting it because he was just like, I don't want to deal with this anymore.
Yeah, lawyers are necessary, but they really are the worst. Like, it's not fun at all. And
Well, I love lawyers. Lawyers, I feel like lawyers, like they keep it from getting less fun.
well, yeah, if you have good ones, yeah. But it's funny, like even in anything, and look, that's their job is like, well, this could happen, and and kind of when I go in depth about and talking with lawyers, it's like, man, like if we eliminated all risk, like we would just close up shop. Like there's just no point in actually like running a business because X, Y, Z could happen. My phone keeps going off. Sorry. We would just close up shop. So there's always, that sort of the juice is worth the squeeze kind of thing, and you can't operate with being,
Well, it's
scared
hard.
of
I
X,
mean,
Y,
yeah,
Z
you
to
can't be
happen.
scared. Like, there is like a parallel like between markets and publishing, in the sense that like, markets you're trading risk, in direct response and in publishing, like there is this thing where like every promotion's a risk. Not just not from a regulatory standpoint necessarily, but just you're putting time and money and media often into, or promotional spots into it, and so some work. It's a statistical game. Like if your team's better, you might get a higher win rate, or your wins might be bigger depending on how you structure your business. But like you're still like, it's kind of like you're trading promotions in a sense, right?
Yeah, I mean, I look at that as far as our marketing. Like, if something that goes out that's not necessarily like a compliance risk, but just seems a little like too hypey and over the top, and it's kind of like, was it like working? And like, yeah, like, okay, you know what I mean? But it's like, you know, you kind of gotta like, but I'm not gonna like sort of risk that if we're like, if it's just getting the same as like any other response. So you kind of got to look for those outliers. It's like, okay, this has like, 5x, 10x response here. We can kind of, we'll deal with, potential like higher spam complaints or like getting a couple of like, crazy emails back from people
Right.
if like, if it's actually working. So,
Yeah.
but that's where I think it kind of falls in. Some of these guys can fall into the trap is like they have something that maybe is a compliance risk and it is working, and it's kind of like, all right, well, yeah, let's push this here, and then you kind of ignore some of the red flags along the way, and
Yeah.
I've always kind of I've learned there's always kind of like these things operating in the shadow that you don't know about, and sometimes till it's too late. And so like if something is like too good to be true, like you gotta tread with caution.
Yeah, I don't think flying under the radar is a viable legal strategy at this point in the world. Like, you've got like, and we've seen this this year that like people were conversion's harder this year, especially compared to last year.
Yeah.
But like in general, it's been a tougher. There's all kinds of headwinds right now between like issues with ad platforms and click competition, and just lots of things, the kind of the softness in the market kind of making people like kind of just spend a lot of time sitting there waiting.
Yeah.
So there's a lot of reasons I think that there's some headwinds, and I'd like to get into that too. But I think that one of the just relevant to this is we've seen some people who were like, well, this is hard to convert. I'm going to just pretend the FTC doesn't exist. Like and I'm like, that is the stupidest decision you can make. If you're doing that, stop. Like you're like, you can't hide. You can't hide.
Yeah, and
And so why would you do that? Like,
I've seen some stuff out there, that I'm like, and some of the stuff I'm like, I'm surprised it's been going on for as long as it can, but I'm just like waiting for the other shoe to drop. I mean, just like with some email, like kind of spam related things, and like, I'm on every list under the sun, and I'm like, how's this person? I actually am like sometimes curious about like how some of them are actually getting into the inbox. Like there, I'm kind of like just fascinated with that whole
right? Oh
thing. I'm
yeah.
like, man, like we are a legitimate opt-in, and we have some going to the promotions tab or getting some spam issues. I was like, these guys are going to my inbox like here, but then like it's for like a week. You know what I
Right.
mean? And then there's something else, and then something else pops up, and it's like, I don't know. That's got to be a stressful game to play. Like, I enjoy building a brand that people recognize and kind of can know, like, oh yeah, that's Angel, right?
Mm-hmm.
That's these guys. Like, they've been around for XYZ. They're good guys. They tend to, we've obviously made mistakes and messed up in a ton of areas, but for the most part, we try to, be upfront and honest. And because the industry is like super small, so people people
Oh
talk
yeah.
and they say stuff that I'm like, that's not true at all. But like, so
Oh, I know.
if you can't even combat like stuff that's not real, like you don't want to put out stuff that actually is real to kind of use against you. So,
Yeah.
but I mean, you talked about the ad platforms. That's I think the biggest thing that I noticed is really the iOS update was pretty bad. And it took us probably 2 to 3 months to kind of realize that. And really, like, I think for us is it just we were getting a lot of duplicate acquisitions,
Mm-hmm.
and it kind of took a little bit to kind of percolate through our system to be like, oh, because for a while you're like, oh, the numbers look good, and then you're like, oh, well, like, you have a certain degree of dupe rate that you're like acceptable with, but when it gets to a certain point, and then like if you're spending millions of dollars, then like it's very quickly that can catch up with you. So fortunately, we sort of discovered it maybe relatively quickly and sort of like try to make adjustments. But I think not just our industry, but like, I mean,
Across the board.
there was some industries that, you know, businesses that just got completely like torpedoed from it.
Yeah,
So
I mean, I think like that iOS update is the start, or is like part of this massive transformation that's happening across digital advertising. I mean, we're seeing like look at what's happened to Facebook, right, or Meta.
yeah.
I mean, they're like in free fall, and the ad platform like is losing users, but like what they were able to give us for so long was so good.
Oh
It was
yeah,
so good.
it really was. It was like, you know, I joke with like, you know, Wes, who's our media buyer, and it was like he almost like didn't even really need to be that good. So like I think he's a great media buyer, and like we're, you know, it's a little bit it's a interesting challenge now to figure out, because I mean one of the things that kind of, you know, attracted me on the marketing side of this industry is like figuring that stuff out, and the fact that like it is gonna change, right? So you can kind of see what's working out there and like put that stuff out there, but you always also got to be looking at what's next. And so that's been our big push, really over the past year, is trying to expand into different you know, channels. Like we upped our YouTube presence and podcast and some of the social media stuff. And some of the stuff I think is long-term plays for us. But now is, I think, you know, with our media spend lower and conversions being tougher, like we definitely are focusing on retention and keeping our subscribers happy, which, you know, fortunately over, you know, 15, 20 years, we've built up a good bit of loyal subscribers that are with us, and you know, just making sure they're happy, and being like, hey, like now's when you kind of got to like double down in the market. Now's when you kind of got to not run away. And that sort of helped us sort of sustain a reasonable level.
Yeah, I mean renewals. If you don't have a strong renewal base, then it's hard to say that you have a stable business, because then it's a hit business without the renewals.
Yeah, the most frustrating part for me right now is like credit card authorizations. That's been and I've seen it like personally too, like way more like alerts, like, hey, like did you actually buy this? And I'm like, yeah, you know.
So you're seeing a big pickup in like authorization problems.
Yeah, just decline rate has gone down from you know, 2 years ago to really just this year. So, and part of it is just, I think maybe the economy, like people maybe like are hitting their limits on their cards. But you know, I'm on the phone with our processor like weekly, just trying to figure out like the different things, and the banks are trying to. What was interesting too, though, is we had a tremendous amount of chargeback issues, like sort of peak COVID, and then it was like the banks kind of figured out, I think, that like people were abusing that, and they were kind of like, no, you can't, like, you know. So we're like our win rate was going up, our chargebacks started coming down, but now I think a lot of these they've got these banking apps now where they recognize that it's a subscription, and they let you cancel like right within the bank app, or you know, stuff like Truebill and these things, like
They're pushing you to cancel and making you like choose every time that to keep the subscription.
Exactly. So that's where I think a lot of some of the declines is coming in. And you know, look, at the end of the day, if they don't want your subscription, like, you know, that's fine. But sometimes just a convenience factor. People are like, why did I stop getting my restriction? Well, your bank declined it. So.
Yeah. So on the acquisition side, to kind of go that like thematically, like where are you guys looking these days? I mean,
Like recent, like right now.
Like yeah.
So oil has been big, and they, you know, our editors have kind of been on that the whole year.
You're one of the few groups that kept an energy business throughout.
We did, market. And you know, our credit, our Keith Cole, our oil and energy guru, like he is a diehard like oil and energy guy, right? So like there was a couple of years there where it was like, oh, like we can't, like how are we gonna sell energy? You know, just how, and you just couldn't. It was really hard. So, but he stuck with it, and he's big on oil right now, but specifically like LNG has been
Hmm.
pretty big, and then like lithium. More recently, like electric vehicle type stuff has really been kind of a trend for the last couple of years. It seems to be picking up. And what else? Coal. Yeah, I said coal. Yeah, coal's big. So that's
Resources.
yeah, really resources.
Hmm.
It's getting like the precious metals, like the gold, silver stuff. I haven't really seen like we haven't really been great on that. It's been more like
Yeah,
actual like
I'm waiting for that. Like I had a conversation with Matt Ward, and I talked to Cam Curry, who's he's like one of the big over at Canaccord who are like they fund more mines I think than almost
hmm
anybody, and like they have a bunch of gold companies, and we had this whole conversation about that. And I know there's all these reasons for gold to come back, but I feel like there's this weird dynamic now in again going back to that idea of narrative and story, that even though I don't think you can maintain it anymore, there was this strong narrative around Bitcoin as the gold replacement. And even though it's correlated now to the Nasdaq, I still think that like there's a lot of people who are, if they're betting against the system, they're going to crypto, not
yeah.
necessarily gold. And so when that tips back, then it's gonna. But like, it's interesting. Like,
Yeah, it's I mean, and look, I'm an avid like sort of crypto like almost absolutist. Like I love Bitcoin and Ethereum. Like I'm all in on that kind of stuff. So I like personally like yeah, I think gold's kind of like an old man's like game. But the fact that I'm thinking that is like tells me that the contrarian is like it's probably going to spike
yeah,
up here in a
it's a
little
central
bit.
bank.
So
It's an old central bank man's game, though. Is what I think
right.
is the thing.
So yeah, and it's really hard to it was funny when in 2017 when that crypto boom was happening, I was like this is what these oil bugs have been or gold bugs have been like predicting was going to happen with gold like for 20 years, and
Right.
now it's happening with Bitcoin. Like, oh, when everybody piles in, and I still think that market's we're on that crypto winter side of that. So I
Mhm.
think I think it'll have its day in the sun probably in another year or two. So we're getting ready for that. But yeah, the precious metals thing has been very odd because you would think that it would perform pretty well in an environment like
Mhm.
that, and I think people just
But it is it's surprising considering how well the rest of the resources market is doing. I guess,
right.
and the fact that like I've been saying this since sometime last year. I was saying you guys are one of the only groups positioned well for a resource boom, which I do like. Talking to like I like to go as far up the chain of analysts as I can. Like going into like because Matt Warder, he was a Woodmac
hmm
guy. I like talking to the financiers behind different resource things. I like going in and seeing okay where are people actually spending like
Right.
capital, and you see like the economics of resources right now. Like there's a super cycle that everyone's looking at. Like it's starting like if you look at the government demand, like for ESG like
hmm
mandates and stuff like that, it's like well none of these things are possible without a mining boom, and supply it takes 8 to 10 years to finance a mine.
Yeah.
So like supply is going to be tight across all these things, and that was before Russia, right?
Yeah, it seems like there's people are loosening their stance too on like the environmental like impact of all this stuff, and they're like okay, like I kind of feel that way about like nuclear, right? Like
Yeah.
for the longest time people were like well no it's scary, but China didn't really care about Fukushima or whatever. They're like we need power, like
Well,
we'll do
it's
it.
I think it's I think that the Russia Ukraine conflict has kind of forced a little bit of like pragmatism on people, and like the realization that there's literally four fuels in the world that can provide base power: coal, natural gas, oil, or nuclear.
Right.
And three of those are fossil fuels.
Yeah.
So if none of the green energy is all peaking systems that
Right.
are they go up and down, they fluctuate, and they can't provide the base power, like you only have those four choices for like the base. You can try and reduce against that, but until there's some other technological innovation in energy that completely changes the world, like those are your options. And so what are you going to do?
Yeah, and that's why I think where gold is kind of lagged behind is that you don't need it for like these like large scale industrial stuff. It's not like, oh, we need, X number of lithium or cobalt to build all these electric cars and
Right.
these batteries. Like the tiny, gold's still just like a tiny amount.
Gold's never going up because of a supply shortage. It
Right.
only can be an investor demand.
Right. And there's so many more options, like you said, now crypto and just like all these other, crypto kind of broke people's brains, I think, when as far as their expectation of like gains, right? So during that, I was like, crap, like, coming out and we're predicting, hey, this oil stock went up 300%. Like, that sucks compared to like these, 1,000% gains on crypto. But I think, that kind of bust and like settling down is sort of like bringing the more traditional like investors back into the like,
Yeah.
and that's always been our focus. So like, the people that are kind of gotten scared out of the market now, like they weren't, they were kind of, the trend jumpers is like, we want people that are like really, willing to ride out the storms and are actually long-term investors and aren't like you said, like kind of biz-oppy, like get rich quick type things. Like,
Yeah. I mean, I think there's like this, like when you look at like the audience as a whole, like the market as a whole, like, there's a bunch of like, I believe we're mainstreaming as a, like investment information publishing in media is definitely mainstreaming. It's becoming much more of a thing that everyone does. We had like the old traditional, like basically upper middle class white dude, who's the main customer, who's a little bit right at the tea party, was always the joke. And then crypto comes in and brings in this huge young audience, but trading was doing that already. So the younger generations are trading, investing more than on a just like a comparison basis to the boomers or Gen X at the same age. So and then you had the older people get comfortable with trading in the last cycle,
right.
right? Because remember, you used to be the only way you could sell an option service before was to pretend that it wasn't an option service. And then you have huge refunds, so it's a crappy way to sell an option service. But now you can sell option services, and you've been able to for quite a while because everyone got comfortable with it. So we have the sophistication of the old art market. We have this new, younger, trading-focused market that's really kind of ballooned up, and I think they've been at it now for a few years, and so they're starting to get a little more sophisticated and starting to look at other aspects of investing besides just the crypto investing. And so I think it's like, from an audience, like a demand side, I think publishing is still in the bull market. I think that our problems have more to do with like the media cycle,
Right.
That like the platform as like display networks have been like the thing for us for acquisition for the last 8 years, 10 years. And I think that like we're seeing in the trading side of the business already that there's a movement towards a social first media format for publishing businesses. Like the Sykes of the world, the Warrior Trading, like you're seeing a lot of that on the trading side where like, because that audience is younger, but I think that model of a much heavier media first approach that does engage with social is going to become the norm for all of us.
Yeah, it's funny, like even 10 years ago, the whole idea of like omni-channel was like big, and I think it's just now kind of seeing fruition where like you kind of have to give your audience a choice of like where they want to consume that content. And it's always, still email is, the number one thing because everybody's got an email address. But, for a while, I mean, sometimes I'll look at some of our best subscribers and they're only opening up like a couple of the emails, but they're like buying the stuff because they're consuming it either like on YouTube, social media, or they're actually just like logging into the website, or we have an app that like kind of they can log in and get their stuff. And I mean, everybody, the inbox is just like so flooded these days. It really is like hard to compete for eyeballs in that.
I think direct mail is coming back for that reason.
Yeah.
I think so.
It's, well, I'll tell you what, in this political cycle here, I've been getting, I mean, that direct mail has been insane. Like I've never, just on a local level, like never gotten as much political mail. And that's kind of like with the ad costs. That's what I'm kind of hoping that, as we get through this midterm, like ad costs, because that was the hard thing is like, it was like, okay, like the market is down, like people aren't spending as much on acquisition. Like why are ad costs still like high? And or at least higher than they should be. And I think you talked about it in a video about just the other types of like financial, like people coming into the
financial services industry spend went from $17 billion a year pre-COVID to $27 billion a year last year, and it's still going up. So that's a $10 billion increase in digital, in digital spend.
Yeah, and I think, that's always been kind of a legacy sort of system, and I think everybody's starting to figure that out. And I think partly too, like I said, the iOS update and this privacy pushes is like you can't target as well as you could. So like you need to spend, a little bit more to get more eyeballs to get in front of those people.
Yeah, so you have more waste in your ad spend now.
Yeah.
And that means your ROI is different. And yeah, it's changing. And so, I mean, we'll see, like there's a lot, I want to get a bunch of media buyers on and have a deep conversation about the changes in kind of acquisition marketing and what we're seeing, because I think there's a ton going on that like is going to have an impact on us.
I
but
think
just before you go, what you're talking about, the political cycle though, like that's always been like, whenever we've gotten into election season, like we know that a lot of money comes in, and that's also going up in terms of how much is spent every election.
Yeah.
Because our audiences, in our target market is always been kind of prime political targets.
Yeah, for sure. And I think, it's a free market, like it'll kind of work itself out, but the political people don't have the KPIs and metrics that like traditional direct response have. Oh, yeah. So it's just like, hey, how much money can you raise? I saw a headline that said like, oh, Trump spent 90 cents to raise $1, like, and they were saying that was like terrible. I was like, oh, like I would take that I would take that return on ad spend right there. So yeah, we'll see. And I think it's kind of exciting to kind of figure out, because some of these areas, if you're kind of like the first or second in that realm, that's when the like low hanging fruit is possible. So just maintaining enough flexibility to try these new things out, is kind of where we're at, and then we can live in there and sort of collect the cheap stuff while it's available, and then move on to the next.
I also liked how you talked about the 10 years ago we were talking about omnichannel marketing, but it never really materialized. It's like a lot of the promises of what's going to happen with the internet. Like I feel like people are right about them, but they're always 10 years too early.
Oh yeah, the time scale is crazy, and some of the stuff happens faster than you think. But I mean, I remember like it was probably around there. Like it was like, it was like, no, we don't want to target mobile users. Like, what do you mean? Like that's all. Like those are just those aren't going to be newsletter buyers. And it was like, it was a couple years ago, and like Wes is like, 60-75% of our acquisitions on this network are coming from mobile users, and and the lifetime value is
but it was
higher, and I was like, okay, and I was like, yeah, I mean, like by that time everybody had a smartphone, and everybody's kind of checking their stuff, and you look at like, it's harder to track now because of this email privacy stuff, but you look at, what email addresses people have and what, user agent they're using. And it's like, so, mobile, you have to optimize for mobile and all your stuff. You have to optimize for like dark mode now, like all this kind of stuff is like, it's just like the adoption is so much quicker. So it's scary in a way, but it's also like, there's some opportunity there for sure.
Totally. But that was a switch. I remember in some of the early Summit media presentations we had when we were looking at the comparison between desktop and mobile buyers, and I remember it was a big deal when people started to say they started to see some mobile buyers, because you hadn't been. So you were trying to deselect them because they weren't buying, and then all of a sudden they started, and then it was just a little bit, and then it's picked up, and then it just switched over completely.
I look at like I try to just look at anecdotal stuff and like my parents or grandparents, and like they're sitting there on their phone too with like, or their iPad.
Mm-hmm.
iPad's a big thing with like kind of older,
Yeah.
like that's just their computer now. So
Yeah. Yeah. I like looking at I look at the real estate marketers, like real estate course marketers a lot, because I feel like a lot of the things, like I feel like our audience in general, and this is changing on the trading side because it's younger, but generally speaking, the newsletter audience is always conservative, not politically, but just in terms of adoption, because they're older,
right,
right? You don't
yeah,
adopt, right? And so a lot of the things that work in like the internet marketing space first, like it's years ahead of the time. It will work. It will come to our space, but it will come later. And then I feel like the bridge market is the real estate investor market, because that's very
interesting.
biz-oppy,
Yeah,
but they're also investing.
yeah,
And so it's a little bit of like that medium. So I feel like when you watch like what's happening in real estate marketing, real estate investor marketing, that's the thing that's right on the edge of coming into our market. And so
right,
like now we see like, you know, in that market, like Instagram and social channels in TikTok, like actually being like the content creation piece,
yeah,
really killing it for people. And so that content creation piece is coming in my mind to our space in a way that's not just email content, not just newsletter content, like that video content. So you guys doing more media content is, I think, a smart move. Like, because I think that piece is coming, and it's going to be one of, just like everything else. It happens super slowly, then all at once.
yeah. And we've sort of changed our outlook on it because we did kind of delve into that probably, yeah, like 8, 10 years ago, and it just was like it kind of like was kind of like we're nah, we're not seeing that. Like, what's the ROI here? So
Right.
we approached it this time as a long-term investment, and not just like, hey, we're gonna put out this video. Like, how many? Direct response is always like, oh, you put this out. Like, how many orders did you get?
Right.
You know what I mean? What's your metrics on there? And so we're taking a long-term approach of being like, look, we're building the brand. Eventually, we are going to monetize that, and it's actually gone surprisingly moved faster and
Mm-hmm.
better than even I think a lot of people
Really.
thought. And some people are just like expecting these huge like things immediately, but we've been really going hard at it for really 4 or 5 months,
Mm-hmm.
and the growth has been steady. And so I just look at it like, hey, where are we going to be at in a year? We're already getting orders from some of this stuff already in leads, and so where are we going to be at in a year? And then more people are going to be adopting it. And YouTube in particular, it's like you see the comments and stuff, and you're not to be like, it's like these sound like newsletter buyers, just the comments that they're making. It's just like it's a very YouTube's very mainstream now, and like I said, TikTok, Instagram, that still is not quite like where
Mm-mm.
YouTube, but YouTube's like a mature thing. Like
Yeah.
everybody knows about it, everybody's on it. So
I mean, it's
that's
it's technically the largest search engine now. It has
right,
been for a while.
yeah. So that's the stuff where I think as far as like attracting leads and connecting with your audience that we're going. But at the end of the day, like we were saying, it's the story and like how authentic you are, and
Mm-hmm.
and that's sort of what we try to lean in, especially the last couple of years. So it's been fun too.
Yeah, and you guys have been doing a great job. So
That's really what it's about, having fun.
yeah, and I got to ask you before we end let's talk company culture,
Yeah.
because I feel like you guys have a very distinct company culture, and I would say that the
Okay.
reviews on Indeed.com would agree that, like, I remember we used to see, they used to be so funny because it'd be like you'd have like these like salary or like, yeah, job review sites, and they'd be like, either people were like, this is the best place in the world I've ever worked, like,
Right.
oh my god, and then other people are like, I don't drink, I hate it.
Yeah. Yeah. It's funny. And believe me, the culture has morphed over the years as we've grown. But going back to real early days, it was kind of, I guess you would call it maybe a startup environment, but it's really, I mean, at the end of the day, it's kind of just like a family environment. But at first and foremost, it's the libertarian philosophy, which comes, all the way back from whatever. That's Brian and Bill are very much about personal responsibility. So everything that we do is about people not needing to be handheld and micromanaged and, being, responsible for their job. And it sounds, everybody, like, it sounds great when people like are like, yeah, yeah, that's what I want. I don't want to be micromanaged. I don't want this boss. But at the end of the day, a lot of people, and probably more people, need hand holding. And so, our biggest criticism is like, they didn't train me. They kind of just like told me to do some stuff, and I didn't get much feedback. And then, like, after a year, like, I was let go. And I'm like, yeah, okay, I get that. And we've tried to preface it as much as possible. I mean, like, that's our culture. Like, it's not necessarily like you can't hack it, because it's not like boiler room style. Like, I think, people are allowed to move at their own pace, but we really are looking for people that are really interested in learning and growing in this space. And the people that are interested, they just thrive. So it really is the whole idea of like follow your passion. And I think most people, like, no one's like, my passion is financial newsletters. But to me, the environment we tried to create is just one of constant learning and like not being afraid to like try new stuff. And really just inside the company, like, if you really like feel strongly about something, like, go and do it. And it might require you to like work extra hard to do that. It might require you to stay late or do extra XYZ. But we encourage that. But if you're just kind of a person that wants to come in like, at 9 and do your job and leave at 5, like, that's fine too. If you're doing well at that, that's fine. But I think, particularly with COVID, it's been hard, like, to find people that kind of want to buy into that
Right.
philosophy. So, but I think we've done, a pretty good job. I mean, we've had a ton of people that have been here for 10 plus years. I've been here for, I think, 17 years
Yeah.
now. And, this is the only place I ever want to
Yeah,
work.
it's always
So.
surprising to me when I hear somebody who has been here for a long time like trying to do something different, and I'm always like, sure you want to do that? Because like you've been in a very specific type of environment for a long time, and I don't know if you can. Maybe you have to go try something else to appreciate how specific
Yeah,
it
it's
is.
always kind of tough, because when people would leave, I would kind of be like, you can never come back, like, kind of. And I've definitely changed my stance on that, because people go through different things in their life that, and that's why I mentioned COVID, like, the whole idea of the Great Resignation. And we really, I mean, for the most part, we didn't really experience too much of that. I mean, there was a couple of things here and there, and but I think it's like hard to put yourself in someone's shoes and like what's going on, like going through a divorce or just like family
Right.
issues. And we've tried to be as understanding as possible in that scenario, but at the end of the day, it's like, hey, we got a business to run there. So it's been a balance of like trying to be empathetic, and especially for people that have been here for a while, and help them through like rough patches versus just sort of like, kind of the old like, oh, I wasn't working out after 6 months, they just fired me. So it's been a balance, but for the most part, I think people enjoy working here, and I think that's because like we're like pretty consistent about what we're building. Like, we don't bring people in and are like, you're gonna get rich in 6 months. You're gonna make more money the next. You know what I mean? I'm honest. I'm like, this is a very like lucrative and profitable business. But I think, when you're thinking about a full-time job, like, we're spending so much of our lives doing this. We have to like, we want to try to have fun
Yeah.
doing it. So, yeah, we do try to like hang out and build a family, and it's worked out for the most part. But I don't fault people for wanting to leave and try their own thing.
Yeah.
I sort of have changed my mind, and I'm like, yeah, like, good luck. Like, I do want people to do well when they go off and do their own thing. I will say there has been a fair number of people that have privately like sort of regretted that, but and I do feel bad at the time, but like, you know, that's everybody's got their own journey, and
Yeah.
I wish them luck.
Nice. So what do you have left on the last? Let's go for like a really traditional podcast question at the end, which
Oh.
is, what are you most excited about in the industry going forward?
Well, I'm excited for the market to turn around. I do think I kind of enjoy, and like I said, I don't like wish pain on anybody, and but I do like, I'm excited about just the challenge that's ahead, because I think whoever like kind of gets to the other side is going to be so much
Yeah.
stronger and well prepared for it. When, I mean, back.
Oh, it's a shakeout. I mean,
Yeah, so back, I mean, 6 months ago, I think I was looking, we had a sort of monthly like stand up, and I was asking people like who was even like working for us or even in the industry in like 2007, 2008. And it actually was not that many, it wasn't that many people. I was like, oh man, like I
wow,
just sort of
really?
like, yeah, I mean, like if you are, I mean, Sarah's over there. Like she was probably in high school when that happened, and
Mm-hmm.
maybe they like remember it, but they weren't, even in the workforce, not necessarily in our
Right.
industry. And so, if you sort of entered in this business, maybe like 2010, 2011, or even so, you would have still been here like over 10 years. You really haven't experienced like any sort of down market
Right.
scary thing. It's literally just been like, you know, party time
Right.
all
Yeah.
day, every day. Obviously some businesses did better than others, but so I'm kind of excited to see the shakeout happen and see who the strong ones are.
Yeah.
And because I know, like, I keep telling them, I'm like, once this like turns around, like we're gonna one, it's gonna feel really good to navigate through a tough time like this and come out the other side and know that like you didn't give up or you didn't sort of like cash in your chips, which I think, some people look, everybody's got a different situation and different scenarios. And, if it's time for you to sort of pack up and move to another industry or sell or whatever, that's everybody's own decision. But I do like the idea of sort of doubling down and building a strong brand. And then when things come
Mm-hmm.
out, you're like that much further ahead. So
I love
that's
that.
that's kind of what I'm excited about, but it's tough when you're going through it.
It is.
It
I'm
is
with you
tough.
too, because I actually started in the industry about 2005 when I went to work as a copywriter for Clayton
Mm-hmm.
Makepeace, and then I went freelance in '08 before the crash, like
Uh-huh.
early, and so like my whole like independent career was like started with the crash and
Yeah.
like living through like how do and I had some of the best years of my copy career in the wake of the
Right.
that crash, and then like now when I talk to copywriters that are way younger, who've like maybe they weren't even here for like the last like they weren't even here pre crypto boom, like let alone like the
Yeah.
crash, and like and the types of copy that they're wanting to write are like, well, you want everything to be Bitcoin when it went parabolic,
Right.
and you don't even know how to talk about the market without that happening and make it interesting. And it's just interesting because I'm like, you can tell it's kind of like the same thing you were saying about, it's like you're either really interested in this shit or you're not going to be here for very long, because once it gets harder, like it's not that it's harder, it's that you have to really care about the markets and the customer and and you have to have an opinion, and it's almost like if you don't have an opinion about any of this stuff and you're not interested in finding out like
Yeah,
what.
you're kind of just going through the motions, and here's a formula, I can do X, Y, Z, and like, I mean, like I said, anybody can kind of do it. Well, not anybody, but I do think figuring out problems is a great sense of joy, right? And I always say all the time, like, if it was easy, everybody would do it. I mean, I was a wrestler and still am a
Mm,
wrestling coach. Like that's where I get a lot of that sort of mentality, is to embrace the pain, because it's going to make you stronger.
yeah.
I mean, you don't. That means you don't just go run into a burning building, but when challenges come your way, let's, figuring them out and pushing forward, like you're just going to get such a sense of fulfillment
Right.
from that. And yeah, I can't, and it's already kind of been because we laid people off about 6 months ago. We had to reduce staff by probably about 20%. And, and also between, maybe some freelancers where contracts didn't get renewed and all that kind of stuff. And it was tough. It was a really hard time, and people were scared. And then you hear like other places like having to do way worse, and like you kind of gotta like count your blessings for certain things. And we've stabilized and are kind of looking forward to the next whatever kind of pops up. And I just keep telling these guys like once we get through it, you're gonna be like proud that you like stuck it out. And then you kind of know like who you can kind of trust to like have with you when you go to battle.
Yeah,
So
totally. Cool. Well, thanks, man, for doing this. This is
yeah,
great.
I'm glad you could come up here
Yeah, this
anytime.
was awesome. I appreciate it.
All right,
All right. Take care.
boom.